Hello, hello. Good afternoon. Happy post-lunch. Hope everyone has enjoyed both the treats, the edible treats, and conversations. I'm Nova Lorraine. I will be your host for the rest of the day. This is my third proof of talk, and every year it continues to grow and continues to get better. So for those of you that are coming back, by show of hands, how many of you are coming back? Is this your second or third proof of talk by show of hands? Ooh, okay. So we have a lot of first timers. Well, welcome to the Proof of Talk for the first time. I'm sure you're having a great time. And as I mentioned, I'm Nova Lorraine. I am an award-winning fashion designer and futurist with Art on the Moon. This next panel is special to me because the art is also a Bitcoin ordinal. And Bitcoin was my first entry into the blockchain space back in 2013. So I consider myself a little bit of an OG, but always excited to host the topics and panels for the Proof of Talk. As you know, it's one of the leading conferences in the space, especially for thought leaders and investors. I'm excited to bring our next panel on stage as well. Everyone having a good time? Yeah? Yeah? Only one person? Come on. You guys are going to make me dance up here to get a little... Is everyone having a good time? Yes. Okay. Everyone enjoying party? Yes. Okay. Always a good excuse to come back to Paris. All right. So we're going to be talking about the next chapter for Bitcoin Layer 2s. And as I mentioned just a little while ago, my art being minted as a Bitcoin ordinal, that was an advancement in the utility of Bitcoin. But where are we going beyond that? And do we see programmability being that next stage to advance Bitcoin? And what has taken that so long? Why now? Well, we have some experts in the space that's going to enlighten us on that. And I'm going to welcome them to the stage. And when I welcome them onto the stage, guys, I want you to make them feel super welcome to be here. Can we do that? Yes? Yes? Okay. So, without further ado, can I have Kevin Hurley, co-founder and CTO of Lightspark, come to the stage? I love it. Rena Shah, COO of Stacks, please welcome to the stage. All right, you guys are going to have to start dancing with me, too. Dan Hell, general partner of Asymmetric, come to the stage. No one's dancing with me? I'm the only one? Come on, guys. Moderator Gareth Jenkinson, head of Multimedia at Cointelegraph, welcome to the stage. Bigger guy. Enjoy.
Good afternoon, everyone. Thanks for getting everyone riled up and excited for this chat. How many Bitcoiners in the room? You don't have to say. There we go. Okay, so we've got an educated crowd here. Let's talk about Bitcoin scaling, Bitcoin layer 2s, the approach to that. And before we do that, I think it's best to paint a picture of what Bitcoin is at the base layer, what the limitations are, and what the approaches have been to scaling Bitcoin since the general community figured out that these limitations did hold it back from some of its original use cases. And Dan, I think you've been in the space a very long time. I think you can probably paint a good picture of Bitcoin at the layer 1, what its limitations are, and why it needed approaches like Lightning and some of the newer layer 2 approaches to solve that.
Yeah, so the Bitcoin base layer is very constrained. It can't do a lot of things, and that's good because it doesn't allow Bitcoin to have a surface area for exploitation or other things that could damage the Bitcoin protocol. That innovation or the scalability is pushed to something we call layer 2s. Layer 2s allow Bitcoin to scale and allow the expressiveness, allow you to do all the things you can do on Ethereum and Solana, et cetera. That can happen on these second layers. So Bitcoin pushes that innovation and that complexity to its layers above it rather than on the base layer, which on the base layer, Bitcoin preserves its core kind of fundamental purpose of being a store of value asset and something that's very limited in function And I believe that's a good design trade-off, and that's also why I'm a Bitcoiner, is I think that's the way it should be built.
Rena, what was your initial sort of introduction to Bitcoin, and when did you kind of realize that you wanted to be a part of figuring out how to make it better? Not that it needs to be better, but be a bit more performant.
I got into Bitcoin in 2012. I'm from the oil industry, and I started mining offshore while working in the oil rigs. Proof of energy, proof of work. When you're already working for an energy company, it clicks. Like, you want a commodity to have something backing it. Like, industry I was previously in, commodities had value. They were physical. And to me, Bitcoin clicked because of the computation behind it and the work that you're putting into it. It was the only digital commodity that made sense.
Kevin, your story into Bitcoin and how you got involved in scaling?
So I was at Facebook working on payments and kind of growing frustrated with you integrate with each country, it takes forever to actually scale up payments. So started exploring the blockchain space, and through that helped start what was called Libra or Diem, which was our internal project to create a new blockchain to help facilitate global payments. We ran into quite a few hurdles where people from Congress or regulators wanted to talk to us, wanted us to make changes, wanted a lot of influence in things. And it became very apparent that it just wasn't going to happen at Facebook. So a bunch of us decided to spin out and form Lightspark with a pretty similar mission in mind in terms of trying to modernize how money moves. And we realized through our experience at Libra and Diem that it just wasn't possible to do on anything other than Bitcoin. We wanted a network that really was decentralized, neutral, where there wasn't a single leader or a foundation that controls everything. You needed something where governments couldn't influence it like they tried to do Libra and Diem. We wanted something that was really neutral. And that's kind of how Bitcoin came as the only real answer.
I find it really interesting that you say that. I want to probe this a little bit, because there were quite a few people that were involved in Libra and Diem that ended up forming Sui and Aptos. You went for Bitcoin. Can you tell us a bit more about why?
Yeah, I mean, I can't speak for their motivations, but from our point of view, it was just that nothing was going to actually work as a global settlement layer unless it was this neutral, decentralized system. And for them, I think they maybe came to different conclusions, that issuing a token was going to be a good solution for them, running their own blockchain. Maybe they felt like they couldn't scale Bitcoin. I think we felt the opposite, that it needed to be on this neutral platform, that it was something that we could build on top of, that we could help scale, and that we could really bring to the masses rather than just have a small group of people that can actually use the next generation of financial services.
Dan, I'm going to ask you this one. I mean, before the Lightning white paper came out in 2015, was there an overarching feeling that Bitcoin payments and the network itself wasn't going to be able to scale as more and more people were using it? And I mean, you have such an interesting story of how you actually first had to buy Bitcoin, Mt. Gox days. It wasn't as easy as just opening a wallet on your phone and buying some Bitcoin with fiat.
No, Bitcoin was incredibly hard to purchase and use back in the day. I used to have to wire money to Japan to buy it on an exchange called Mt. Gox, and that took about a week. So I put my dollars, my real money, sent it overseas and bought this magic internet money, and a week later. So it was a bit of a weird experience. And in the early days, there was a very common narrative that Bitcoin is meant for payments. It was meant to replace PayPal. Very quickly and early on, I realized, and many others realized, that Bitcoin is a better gold 2.0. Its monetary properties, the 21 million hard cap, make it a very good money, a store of value gold 2.0 asset. Its other characteristics of its cryptography, et cetera, and how the blockchain is structured is geared towards that. It's not very good on the base layer for everyday payment methods. Technologies in layer 2s like Lightning and Stacks, and other L2s as well. You've got like Starknet, et cetera. Those are really good at allowing people to do transactions that are very low cost. So if you wanted to save money on instead of paying your merchant 3% for credit cards, if you use a Bitcoin layer 2, those are usually far cheaper. When it comes to did we anticipate this, we can look back at the Bitcoin Talk forums. That's where the conversation first started. Before Reddit, before Twitter, it was Bitcoin Talk. And on Bitcoin Talk, you can see some of the top cryptographers go back and forth, and pretty quickly realizing that the Bitcoin base layer will never scale to support the whole world, that it will have to be supported via additional layers on top, layer 2s. So I think this was anticipated quite early on, to answer your question succinctly.
Yeah, I spoke to Adam back in Las Vegas at Bitcoin 2025 2 weeks ago, and he literally pointed to that, like Hal Finney saying a very long time ago that Bitcoin as the base layer might be, the central bank of the world, but we need to add a few layers on top of it to get there. And that's really the focal point of this conversation. There's two approaches to this, right? Bitcoin for payments and Bitcoin for smart contract functionality. Lightning does payments. Various sort of EVM implementation, BitVM approaches allow us to do some smart contracts. Maybe we can just start off with Lightning for payments. Kevin, maybe you can touch on this and why the technology works, where we are at the minute, and how long it's going to take for people to actually start using various Lightning implementations to pay for everyday things with Bitcoin.
So I'll actually challenge a little bit that it works. It works for specific use cases. And we power a lot of Lightning infrastructure. We power all of Coinbase's Lightning transactions. We power Zappo, Rain, a bunch of others. And it works very well for custodian-to-custodian transactions. There are plenty of areas it doesn't work super well in. And actually, that's why we created Spark, which is a new layer 2 to kind of solve those problems. But it doesn't work well for self-custody at scale. If you wanted to onboard billions of people, self-custody wallets tomorrow, you're going to have a pretty horrible time. You need layer 1 transactions for every time you open a channel. It's actually quite a big headache to manage Lightning nodes. It just isn't something that would really scale, and you have liquidity lockups. It would be a nightmare. But it does work really well for the use cases that people pretty much use it for today, which is custodian to custodian. So if I'm Coinbase, I'm sending to Kraken, works super well. You have actually extremely high reliability these days, extremely low latency. So it actually does work really well for those types of payments. But it has to be kind of that specific domain that it works really well in today. I think there's ways to improve it, but there aren't really ways to get it to perfection where it's going to work for billions of users tomorrow. And that's where new layer 2s are trying to come in and solve that same problem.
Rena, what's your view on sort of Lightning versus EVM, and can you explain to everyone just really what the difference is and the nuance between the two before Dan jumps in as well?
I think the Stacks perspective is we will not do EVM, and we are adjacent to Lightning. I'd say that we have a lot of collaborative properties that are similar of self-custody, unilateral exit. Everyone should custody their Bitcoin before moving it into a layer 2. But fundamentally, similar to you, have felt that running state channels are difficult. Running payments channels for Lightning is different for the operational element because you have to open channels and manage liquidity back and forth. Fun fact is I actually was the person who removed all the Lightning channels from Binance US. I ran all the nodes, and Lightning nodes were so difficult to maintain before having solutions like Lightspark that as a exchange, we did not want to run these to move our assets back and forth out of cold. And so we went into a different direction. Now, coming at from a Stacks perspective, we are a layer 2 built on top Bitcoin. We use Bitcoin as our DA, but we developed our own virtual machine environment to do more robust smart contracts. And we felt like this was a more akin approach to Bitcoin because we're still reusing proof of work. So the hardness factor, the Lindy factor is there, but you can develop really robust DeFi applications and do all the exotics that you do in crypto today while still being tied to Bitcoin security. For us, it felt that payments is never going to be the narrative for Bitcoin going further. It's about creating generational wealth and actually preserving that wealth, whether it's through DeFi or other staking or yield opportunities, and that's why we went in that direction.
Go for it, Dan.
And I'm one of the general partners for Asymmetric's Bitcoin DeFi Venture Fund. So we invest in Bitcoin L2s. So in this category, that's also why I'm on stage here. We look at a lot of Bitcoin L2s, and there's a lot of different design architectures. Like you've got Lightning, which is state channel related. You've got EVMs. You've got all sorts of different ways to slice and dice it. We're somewhat agnostic. We don't have a winner. For example, Asymmetric, we've invested in a handful of Bitcoin L2s. So, for us, we don't think it's a winner-take-all market. We think that, as mentioned before, Lightning is, I think, specifically made for different types of purposes. And I think it's better utilized in certain ways. And we're certainly fans of Lightning. We're not Lightning haters or anything like that. And same with stacks as well. So we kind of see it as a spectrum of Bitcoin L2s that will be supporting the Bitcoin ecosystem instead of just a winner take all. Each one has its own design and game theoretic trade-offs, and it's certainly that combined with marketing, business development, how do you get people to build on top of your layer 2. That's what we look for in founders who are building Bitcoin layer 2s, and so that's why we've invested in more than one.
Kevin, Rena made a very interesting comment, and it's definitely one of the most divisive things in the entire Bitcoin sort of space is Bitcoin for payments versus Bitcoin as a store of value. How do you view that debate, and do you think that Bitcoin can still be a very, very good payments network that we're using every day?
Layer 1, obviously not. As Dan mentioned, it's too slow. You're constrained in the amount of throughput you have. But I think layer 2s on top of Bitcoin is where the future of payments will be. When we talk to, for example, we have Nubank as a partner, one of the largest neobanks to ever exist. They're super excited by this being built on the neutral network, where they can actually scale payments on top of Bitcoin, connect fiat to fiat, that's glued together with Lightning, with Spark, with any other L2. You can have facilitate payments through Bitcoin and really glue together these disparate networks like Pix in Brazil, UPI in India, FedNow in the US. You can now glue these networks together in a way that you couldn't before and do it on a neutral network where you're not relying on Vitalik or the Solana Foundation that might make changes. They have pre-mined a bunch of tokens. You're actually doing it on something that's neutral and not influenced by governments or regulators. And I think that's where the future of payments is. It isn't in a proprietary network that is owned by Visa, MasterCard. It's in this open neutral network, and I think that is Bitcoin.
I think you can even expand payments of, it may not be BTC the asset as payment, but Bitcoin-backed assets supported by Bitcoin L2s. I think stablecoins, you have Tether going in this direction. On Ordinal's side, there is USDH by Hermetica, which is a yield-bearing stablecoin. But I do think Bitcoin-backed is the most important aspect in all of this. If you want the security of a Bitcoin network, whether it's on the base layer or on an L2, that's what you want in your global payment settlement, as opposed to spending your sats.
And I'll jump in here, and hopefully I'm not jumping the gun on a future question, but in the community, I think there's a bit of a debate between does your L2 need a token or not? And we're again somewhat agnostic on this, but I have seen tokens work in other ecosystems like Ethereum and Solana where tokens are kind of like the form of quasi-equity in a way. I feel like post-Trump election we can say things like that, but previously that was a bit of a hot-button topic to make it equivalent or make it sound similar. But I do think that, for example, I used to work at Uber headquarters, and at Uber we took VC capital and we sold VC's equity in Uber. And we took that VC capital and we subsidized the Uber rider and driver network to bootstrap it in every single city across the world. Almost every single major city across the world. And so having a token, you do get access to capital that not a lot of the chains that don't have a token, you can use that token to incentivize participants to create liquidity, to participate in the network. And we do at Asymmetric see that as an advantage. We are certainly fans of both styles. I'd actually be curious, some of the internal dialogue and back and forth, you guys are, I think, very anti-token. I would love to hear your kind of thoughts on why you all thought through, like, we're just never going to do that.
I think we feel that Bitcoin, the asset, has unique properties that make it really valuable. It's highly liquid. You have really tight trading pairs against pretty much any currency out there. And if you're going to build a financial network, you need those really tight trading pairs and high amount of liquidity. I think we aren't trying to build a network where we pre-mine a token and get a bunch of equity through that. I think we're trying to build a network that is really good for payments, and to this point, we haven't needed a token to do that. Maybe someday it'll come and we'll decide that a token is useful, but I think building on top of Bitcoin has a lot of really useful properties that we feel are valuable.
And is the business then just based on taking fees of people using it for payments?
Sorry, what was the question?
Does that mean that your business relies on generating fees?
Yeah, we help facilitate transactions. We collect a small fee to do that.
Rena, you were going to jump in.
Yeah, so Stacks obviously has a token, so we're on the other side. We've created a token because it helped align incentives actually to Bitcoin miners. When you mine Stacks, you must commit Bitcoin. We fundamentally believe that you need to pay Bitcoin miners and pay your fees to the network, and so that's actually why we did a token design, so that we're making sure that we're always adding to the security budget of Bitcoin via Stacks. So we do Bitcoin transactions on a daily basis, and allowing the value to accrue to kind of every area of Bitcoin, whether it's our L2 or other L2s, it actually doesn't matter because we want the ecosystem to grow as a whole.
My next question is, why is it so hard to scale Bitcoin? I mean, does it come down to the code of the L1? And there are these various approaches, right, like Lightning, EVM approaches, and a few other. But why has it remained such a difficult problem to solve? Maybe you can jump in first, Kevin, because you came from Libra and you learned some lessons there, but then you had to apply that to the technicalities of working in Bitcoin.
Yeah, I mean, it's definitely more difficult to build on Bitcoin than on Solana, for example, because you're more constrained in the number of opcodes that you can actually use, which really limits what you can do from programmability standpoint. Now, that being said, there's a proliferation of new L2s that are popping up now. There's old ones like Liquid, Stacks, Lightning Network. I think there's a lot of momentum that's growing on Bitcoin, developer excitement that's growing on Bitcoin. As these new L2s pop up, they add new ways to do things that builds a lot of excitement. And I think you're going to be seeing kind of an explosion in developer growth around Bitcoin just based on these new L2s that are popping up that have different trade-offs and different ways to actually facilitate the same end result.
Maybe as a perspective, I don't know how many people know how many core developers there are on Bitcoin. There's actually very few core developers contributing to Bitcoin. But if you combine all of the Bitcoin L2s, we have thousands of developers actually trying to build value to the Bitcoin network. And I think that's a key fundamental difference of Bitcoin script has limitations. There are kind of soft forks out there that might expand via like OPCat or BIP 360. Like there are ways that we are trying to expand. But together, every L2 realizes that there will be nothing quite like Bitcoin, and all we want to do is have our developers contribute to it in some way or form.
And when we look at the opportunity size, it makes sense that even though while Bitcoin's layer 1 is quite limited and it's hard to build these layer 2s, the opportunity size is massive. It's a $2 trillion asset. And people want to borrow dollars, as Rena's talked about, borrow dollars using their Bitcoin as collateral, or use Bitcoin as a payment method. And tapping into that, if one of these L2s really cracks that use case of either borrowing, lending, yield farming, spending, whatever it may be, we at Asymmetric view that as a huge opportunity for the crypto ecosystem. In fact, we view it as the largest opportunity ever to exist. I mean, Bitcoin isn't just the largest asset in crypto, it's bigger than everything else combined. So if DeFi or a layer 2 is able to tap into a use case that people want, and then unlock all that capital, that we believe is probably the biggest event ever to happen in the space.
Let's talk about some of the barriers then. I think security comes up as one of the biggest concerns when it comes to L2s. And I just look at like Ethereum and layer 2s, and the biggest criticism of a lot of those layer 2s is that they're pretty centralized, right? Like they're running the execution on a completely different environment, and then they're submitting ZK proofs, if we're talking about ZK proofs, to the Ethereum mainnet for security. But the L2 itself is pretty centralized. How do you tackle that when you're trying to scale Bitcoin at an L2 level? Because people want the security of the Bitcoin network, but then all of the computation and all of the actual transactions are happening at another level that might arguably be centralized. So maybe you can talk from a Stacks perspective first.
Yeah, I mean, Stacks has taken the progressively and aggressively decentralized approach. We run validators. There are hundreds of validators kind of securing the network. The fundamental thing that matters to us is that we're contributing back to proof of work. And so our consensus mechanism actually, I guess the best way to put it is like a roll-up or like a recycle of proof of work, so that we're continuing to use an inherent Bitcoin security, which pretty much every Bitcoin layer 2 should be using the base layer security. So essentially, we're running our sequencers, our validators, still on chain, but through a different validator network that's adding to the security budget. So it's a little bit different, but at the end of the day, it gives us a kind of the best of both worlds scenarios. We build on Bitcoin, so in order to reorg stacks, you must reorg Bitcoin, which is virtually too expensive for someone to do. Nobody has 51% of Bitcoin to reorg. It is too challenging. But at the same time, we have a little bit more flexibility with the validator network that hundreds of companies or people, individuals are running nodes and contributing in that way.
Yeah, when we look at all these L2s, there's all sorts of different design trade-offs, right? Like you can be faster or have more throughput, or be more expressive, which means you can do more DeFi stuff, but maybe that comes at the cost of decentralization. I'm making overly sweeping generalizations here, but in life, everything comes with trade-offs. And so these L2s in their design architecture typically have a series of trade-offs. Bitcoin itself isn't, Bitcoin has game theoretic and design trade-offs that it has made, and Bitcoin is protected through game theory. It's basically relying on human incentives and human greed to power it, right? Which is, Satoshi, in his brilliance, he harnessed that primal human nature and then wove that into Bitcoin's security model. I'm waxing a little bit too poetically here, but what I'm trying to say is that Bitcoin L2s, there's different design trade-offs, and if you want a transaction that has the game theoretic security of the Bitcoin base layer, then you got to be on the Bitcoin base layer. Virtually every L2 has some sort of game theoretic design trade-off where you are sacrificing decentralization or security to do more cool stuff.
What's the trade-off for Lightspark?
Well, we use Lightning for a lot of what we do, so you have the trade-offs that Lightning has. We recently released Spark, which is our new layer 2, to mainnet beta in April. The trade-off there, the purpose of it was to make global payments. The trade-off is you have at least a one-of-n security model where you need one honest operator. We think of it as like a point-in-time type of honesty, where if the operator is honest at the time of transference, then if they're later hacked or become malicious in the future, there's no way they can rug you. But there is that moment-in-time honesty that's required by at least one-of-n honest operators.
I'm curious to hear your guys' take, and this is completely away from the L2s. The rise of Bitcoin treasury companies. This is essentially a proxy play on Bitcoin, right? It's TradFi's approach to DeFi on Bitcoin, or it's not a layer 2 because it's just not the same thing. But yeah, I'm curious if this seemed like a natural progression to you. Go for it, Dan.
I mean, I put out a tweet the other day which said, "Called me old-fashioned, but if you want to buy Bitcoin, just buy Bitcoin. You don't need to buy MicroStrategy. You don't need to buy any of these other equity plays." A lot of people are buying these equities because these equity companies are purchasing Bitcoin, and the equity company is issuing debt in order to purchase more Bitcoin, so it's sort of a leveraged Bitcoin play. If you want Bitcoin, just go buy Bitcoin. I think some of these are going to blow up in a very dramatic fashion. I'm not saying MicroStrategy will. I don't think they will, but some of these other plays, these kind of copycat players, their debt agreements are far riskier, and so I think this will blow up very dramatically at the end of this cycle. So I don't recommend that people buy any company that's doing a Bitcoin treasury play. Just buy Bitcoin.
I mean, you two, do you guys put Bitcoin on the balance sheet, first of all, and do you have any thoughts on what the MicroStrategies and Meta Planets, 21s, Nakamoto's of the world are doing?
I mean, we definitely put Bitcoin on the balance sheet at Lightspark. We feel that's really important, and honestly, it's been good for us because Bitcoin's gone up. I don't think Bitcoin's going to go up forever. It's going to have its ups and downs. Hopefully it trends upward forever, but it's going to have its ups and downs, and if you're a company, as Dan mentioned, that's highly leveraged, you're probably going to have debt collectors come in and claim the debt at some point. So that's not something that I personally would do, is invest in MicroStrategy and others, but I agree, just buy Bitcoin.
We obviously keep Bitcoin on our balance sheet. You can't be a Bitcoin L2 and not support Bitcoin, so we're going to carry on that. I'll say this. I really hate ETFs. I think it's a terrible idea of leaving Bitcoin in cold storage where you can't do anything about that because you're under investor protection rules, RIA, and it must stay in cold storage. So Bitcoin goes to JPM or other banks and leave it be. In comparison, I actually think treasury plays are marginally better because at least private companies could stake their Bitcoin or add some value kind of accrual to bring more value back to the Bitcoin itself. But, buy Bitcoin.
Yeah, I just want to add to that. I spent a whole week in Las Vegas at Bitcoin 2025, and one of the major themes that I explored was, has Bitcoin been captured by institutions and politics? I asked Jack Mallers from 21, I asked Dylan Leclerc from Metaplanet, two people that are building two of the biggest Bitcoin treasury companies other than MicroStrategy. And their first kind of take was, buy Bitcoin. If you want to buy Bitcoin, don't buy, these shares. But the second point was those offerings are for a very specific type of investor, and they offer you very specific things. There are inherent risks, and that was the other question I asked. What are the risks, At the end of the day, if some of these companies take on too much debt or they don't structure it in the right way, there's every risk that they could blow up and die. They're really, really great interviews. I implore you to go check out the Cointelegraph YouTube channel, Jack Mallers, Dylan Leclerc. You can find both of those interviews, 10, 15 minutes long. I promise you, you'll learn a lot about Metaplanet in particular. I think that's the most interesting story out of all the Bitcoin treasury companies, purely because of the way that Bitcoin is taxed in Japan. It's very difficult to use and trade Bitcoin in Japan, right? Versus a stock like Metaplanet, where there's very, very big financial and tax incentives for Japanese people to invest in the stock markets. Finally, they have a company that has Bitcoin on their balance sheet that is performing really, really well. It's locked into a hard asset, and you can see the benefits of that. So it's a fascinating part. It has nothing to do with Bitcoin L2s, but it is by proxy, something that I wanted to speak about on stage today. Rena, you look like you wanted to jump in.
Yeah, I'd say there is actually one good thing about Bitcoin treasury companies. I love the ones outside of America because a lot of those countries have difficulty buying Bitcoin. So like Metaplanet is a good example. This is actually occurring in India right now. There's Jet King trying to buy Bitcoin on their balance sheet. India is the most populated country in the world. You have 1 billion people who might be able to access Bitcoin because currently the way India taxes Bitcoin is difficult. But when you have a country that has 1 billion people who already only do mobile payments and believes in gold, a country built on gold, this actually makes sense and is good for Bitcoin.
Yeah, definitely. Dan, I'm going to put you in the hot seat here. You got a lot of hate for supporting Bitcoin ordinals over the last 2 years. My question is, does Bitcoin need these things? Should it just be focused on payments and a store of value and some DeFi applications? And should we be playing around with NFTs and that sort of thing on Bitcoin if we have the technology to do it?
Yeah, so for the audience, I'm not sure how many people understand what ordinals are, so I'll give a brief primer. Ordinal technology basically allowed the Bitcoin blockchain to support other assets other than Bitcoin itself. I don't want to get into the technical details because it's going to take too long, and we only have about 6 minutes left. So ordinals allow you to have things like NFTs. NFTs are like for example, a provably scarce digital asset, like a one of one, like a painting here. Like a digital painting or a digital Picasso, you can provably own this one, or you own the one that everyone else wants to own, and you can provably own that through cryptography. Same with other asset types like BRC20s. These are other like meme coins, basically, are the primary use case for BRC20s. Those two types of assets are under the broad bucket of ordinals. The Bitcoin community sort of fragmented in two, those who felt that ordinals were okay for Bitcoin, and those who didn't. I'm in the group, obviously, that is pro-ordinals and pro-Bitcoin DeFi and Bitcoin L2s, especially very permissive ones, and if they want to have a token, that's totally fine. That's considered a more liberal approach, and the more conservative approach would be, stay off my blockchain, it should just be used for Bitcoin transactions. So for me, I approach this from a first principles perspective of that the Bitcoin blockchain is permissionless. You can do whatever you like with it, including things that other people don't like. So I might object to how someone else uses the Bitcoin blockchain, but if people want to use it for that, they're going to use it for that, and there's nothing we can do to stop it, which is the truth. As much as the other side whines and complains about it, there's literally nothing they can do. And so regardless of my own opinion on if someone should buy a JPEG or not, which I think is subjective and they should decide that on their own. I'm not going to hard shill that on stage. Their right to do so, I do believe in. It's sort of a very libertarian, free market capitalist sort of perspective of like, if people want to engage in commerce, I'm not going to stand in their way. If two willing parties are engaging in a transaction, I don't care. And so that's kind of my feeling about it. And I think that covered some of the argument back and forth on it.
Definitely. Rena, what should and shouldn't Bitcoin do?
So long as it generates fees to the network, I don't care. I think that's the whole point. We want Bitcoin to last. By the time we're all dead, you want Bitcoin and the network to survive. And so long as there are transactions coming through, whether you're spamming it with JPEGs or yielding with DeFi, it shouldn't matter. Like, it is not our right to limit it.
Kevin?
The irony is I think it won't matter 5 years from now. I think that most of this activity, if Bitcoin L1 is actually seeing significant volume, will be priced out onto L2s. And you'll see ordinals, runes types of activity on L2s. So I mean, on Spark, we have LRC20, which is, you can think of it very similarly to BRC20. I think a lot of activity is going to move to these L2s. We have Magic Eden coming on board pretty soon, which is going to drive a ton of volume in those types of activities. And I think it's going to be priced out of L1 because it'll be more efficient, quicker to actually do on layer 2. So if there is significant volume on layer 1, I think you'll end up seeing a lot of this activity move to layer 2, and the discussion will be kind of moot at that point.
I'll hop in, and I also agree with that point. I do think if the Bitcoin base layer indeed is this foundation for the world's financial system, only high value, super valuable settlement transactions will occur on the Bitcoin base layer. Those types of transactions are willing to pay a higher fee and therefore crowd out lower value transactions. So, you know, I think long term we'll also see most of that DeFi activity on Bitcoin move to the layer 2s. But basically, the way we can think about it long term is low value, small transactions will eventually get priced out on the Bitcoin base layer. Whatever that may be, whether it be a transaction like a coffee payment or a payment for or an NFT being traded.
Are there any non-negotiables when it comes to like L2 approaches? I know a lot of Bitcoin maxis were like, you should never be trading your Bitcoin for, you know, like a shitcoin, you know, for some L2 that's kind of obscure, and saying, we want to help scale Bitcoin. Give us your Bitcoin, deposit it to this address, we'll bridge it, and we'll do, you know, an EVM implementation. I mean, we've already said that, you know, there's a lot of people that hands off to that approach. I think that remains one of the largest kind of red flags, is like, hey, if I'm giving up my Bitcoin, I'm worried about using this L2 scaling approach. What are your thoughts on that? Either one of you can take it.
I mean, when we created Spark, we created it to use Bitcoin natively because we felt passionately on building real-world use cases for Bitcoin and kind of extending what you can do with Bitcoin. And for us, the non-negotiables were it needed to work really well for payments, it needed to have unilateral exit so that we couldn't censor you, so that no government could come to us and force us to censor you. And it needed to be something that would scale really broadly. So those were the core non-negotiables for us.
For us, it was self-custody and unilateral exit, so very similar approaches that when you're bridging your Bitcoin, let's say into stacks to SBDC or another chain in another route, you need to maintain custody of the underlying principal of the Bitcoin, whether it's with your self-custody wallet, like Lether, Xverse, etc., or if you choose a custody model of Coinbase Custody or BitGo, it doesn't matter. You must retain the principal and have the unilateral exit to redeem at any point in time.
And by the way, for the crowd, when they say unilateral exit, they mean that you don't have to ask permission to get your money out of the L2. Our philosophy at Asymmetric is that we're very market-driven, is that we don't have any non-negotiables because the market will determine whatever the market price is as what they would like to use. So our feeling is that people will use whatever they deem has the best trade-off of utility and security. And so we're more agnostic as to how they're all constructed, and the market will decide what it wants to use.
We're pretty much out of time, so I'm going to call it there. I know Elizabeth Stark's in the room as well. She spoke from Lightning Labs on the main stage a little bit earlier. They're doing some really interesting implementations, stable coins on Lightning as well. So if you missed that, go ahead and check out the live stream. Again, thank you to all three of you for your time and your insights. I implore everyone here, I think that a lot of people put up their hands, they're Bitcoiners, they own some Bitcoin. Do your research on Bitcoin. Don't forget about Bitcoin. It is all of this is because of Bitcoin, and I think we all owe it to do our bit to advocate for Bitcoin, not only as a store of value, but as a payments network. That is what it was originally envisioned to be. And yeah, I hope you guys enjoyed the chat. Enjoy Proof of Talk. Enjoy Paris. We'll catch you soon. Thank you.
Thank you. And as you heard our speaker say, just buy Bitcoin. Just go to Bitcoin. Go get Bitcoin. So that was really interesting and exciting for those of us who've been in the Bitcoin ecosystem for a long time, but those that are just starting to get into Bitcoin. And I'm going to ask anyone that would like to continue to converse with our amazing speakers are on stage, if you can move those conversations into the hall as I welcome our next panel.